morning, and welcome back to the week here, and welcome back to yet another Startup Streamlined. This week, I am joined by the all-knowing Marc Miner, and we're going to talk about things like blockchain and cryptocurrency, which for a long time I think were sort of sexy words, but people didn't totally know what those meant, and they kind of conflated the two issues. And so today, Marc, who's a senior counsel in our investment management group and one of the members of our crypto and blockchain practice group, is going to help us kind of understand what's up, what's down, where's north, south, east, and west. And so today we're going to focus on the rapidly growing momentum of cryptocurrency and maybe talk a little bit about why it's tanked recently if you have any currency out there. And we're going to cover the fundamentals of how blockchain technology drives crypto and how this booming industry is evolving into an era that may be subject to monetary policy, to regulate buying, exchanging, and trading on platforms, as well as securities issues, which naturally puts this right down center lane for Mr. Miner. So we're going to touch upon the advantages of managing these financial assets, their associated risks, and growth potential in an ever-changing and new market. So if you have any questions or comments as we go along, please do drop those into the chat, and we encourage you to join in on the discussion. No question is a dumb question, and I guarantee you if you have that question out there, someone else probably does too. So we might as well get it out there and get those questions answered, because knowledge is power. So without further ado, let's go ahead and get started. Marc, why don't you briefly introduce yourself, and we'll rock and roll from there.
Well, thanks everybody, and thanks Lindsay for inviting me to participate on this topic. The good thing is that there's no pressure here because everyone is figuring this out at the same time. By way of background, as Lindsay mentioned, I'm in the corporate and securities transaction group with a focus on investment management. Also in the business litigation group, such that when regulated entities come under usually unwanted regulatory scrutiny, I assist those institutions. By way of background, I spent about half of my career as a regulator, both in-house at the New York Stock Exchange and the Philadelphia Stock Exchange, which trades derivative products, and then also as the bureau chief of securities in New Jersey and the bureau chief of investor protection in New York. So I spent a good part of my career fascinated. I kind of came along at the time when lots of technologies were taking over all the ways that financial services were being conducted. And so crypto is just this the latest iteration. And so I focus a part of my practice on helping institutions figure out all the ways in which technology is touching their businesses and their institutions, and both as ways to drive business and to communicate with partners and help them to grow.
Awesome. So Marc is wildly knowledgeable in the security and investment space, and he helps a lot of our clients steer clear of regulatory violations. So he is an absolute all-star. So I'm very grateful for him to join us today and for him to impart his knowledge on us. So let's get right into it, because I think first things first, let's start with a baseline question for folks out there. What is the blockchain and why should we care?
Well, that's a great question. So, how many hours do we have, right? I don't know how much time we have today, right? So let's start with
30 minutes. So it's got to be a condensed version.
Right. So I'm going to try to thread the needle here between people who know something about it and those who may be starting at zero. At its most basic, blockchain is a process of technologically recording transactions between two users. That information is put into what we refer to as a ledger. It's really just a system and a recording of who owns what, when that happened, and what it's worth. We'll get back to what it's worth. So people will refer to that as the ledger. So blockchain technology is really just a record-keeping instrument, right, that is maintained in cyberspace. The most important feature that we'll probably talk about today is that this ledger is anonymous, so that the two individuals who have bought and sold or traded something and added something to the blockchain are not identified in the normal way that banking would be. And this is as it was originally designed. And it is used for lots of things, including transactions of what we're referring to as cryptocurrency. But it really is being used in lots of ways that are probably a superior audit trail and a record-keeping system of what has happened between two parties, contracts, and other things. And that as a technology is not Frankenstein. It's fundamental technology that I think is the system on which all these other things we're probably talking about are being built.
Right. And so it's an immutable ledger, right? So immutable ledger, meaning like you can't go in and just change it, right? Which is what makes it so difficult to hack, not only the anonymity, but it's really just, not to say it's impossible, but when we start to get into especially quantum blockchain and quantum contracting, it's virtually impossible. I guess give us 5-10 years, maybe that'll be cool, and I can start with something else. But okay, super helpful. And then what is cryptocurrency really then?
So cryptocurrency is a description that is thrown in to describe a whole bunch of different things. But basically, here again, without getting too wonky, we have to start with cryptocurrency it's a broad term. This is all very, very new. In all the ways that we are talking about digital currency, there is a guy under the pseudonym of Satoshi Nakamoto who really just created the platform that we think of in terms of cryptocurrency 13 years ago, right? So this is all very new. And so it was intended to be a alternative to central bank ways of passing things of value between two people, two users, without central banks. It's basically it's electronic peer-to-peer transaction. That transaction goes on that ledger that we talked about so that people can figure out who owns it and when. So that when that person who bought it, whatever that is, use cryptocurrency to buy it, the ecosystem can prove that the now person who was offering it has something of value, what that thing is, and then is passing it on. So immutable ledger is the great part because it's great as an auditing tool. The anonymity is the difficult part. These ideas of what is actual currency is a process by which people who work in the crypto space are incentivized to mint, to mine for these things of value and prove that they actually exist. So let's say that 5 or 6 people with really smart algorithms and supercomputers are all going to confirm that Lindsay was the last person to own this thing. And once they prove it, it exists on the ledger and it's immutable. But no one really, quote unquote, holds these coins in a way that you would think of any other coin that you hold. It exists on the ledger until someone else buys it, right? Or transacts with you to take it.
Super helpful. So just for we're making sure we have a good foundation here. When I'll use myself, when I buy cryptocurrency or I buy an NFT, what exactly do I own?
Oh, wow. So, most people in the regulatory space are going back to the ways that we think of what is money or what is currency. I can tell you that even before it was clear what it was, regulators jumped in. The SEC was first, saying, we'll know what this is, but we're going to tax it, right? And then next was the Commodity Futures Trading Commission, who said that this thing that's being traded, that people are trading back and forth for something of value, it kind of goes up and down in price based on the limited number that there are out there, is really more like a commodity. And so we are going to think of it as a commodity. But people often confuse whether or not they are investing in cryptocurrency for profit or whether they are transacting in crypto for the worldwide store of things of value. What happened was that sometimes people who had small fractional interests in Bitcoin, because we all know that they're worth lots and lots of money, while they were holding it and waiting to do something with it in this ecosystem, the value shot up hugely. So instead of buying the thing, whatever it was, with someone else around the world, they started buying and selling those. And this is really how the notions of those two have really compressed. You mentioned NFTs, which is non-fungible tokens. We only have 30 minutes. I won't go into it, but there's a huge debate now on how non-fungible tokens are being used to own other things, digital representations of art. And art in the real world has intrinsic value. And the other component about this, we'll get to a little bit, is that all of the value of any currency or coin kind of rests on the idea of security. Is it going to be there? Is it going to have relatively stable value? And can two people agree on what its value is right now and what it's likely to be tomorrow? And this is, you mentioned, the calamity that we're seeing in Bitcoin. This is part of the free fall that they are in right now, because it is not undergirded by any thing of intrinsic value. It was given value by minting a limited number of coins and then throwing them out into the universe.
Yeah, it's been wild to watch that Bitcoin and Ethereum and everything else, that ride, because it peaked up there at something like $69,000 and then just plummeted to the depths of the earth. So super interesting. So I guess since we're on that, what's the difference between a Bitcoin and Ethereum high level?
So excellent that you asked that question, because Bitcoin and Ethereum are only just a few of hundreds of ways that people can invest in cryptocurrency. There are technologies, little tiny wrinkles between Bitcoin and Ethereum and others I won't get into, other than to say that process where the really smart people in the supercomputers confirm who owns what and when, the time that answer happens, that we call it a settlement, is different for different institutions. The only really important thing, if we're talking top line right now, is that Bitcoin and Ethereum have been around enough, and regulatory concerns and the markets have seen it around enough that it is it's definitely more adopted as a medium of exchange for those two things. In fact, you start to see now that the SEC will say, we don't really approve of this technology, or we don't really approve of this investment unless that investment is in Bitcoin or Ethereum. So they're really just early entrants in the market who have enough transactions and market presence for early adopters, both in business and in the regulatory world, to say, if you're going to be dealing in this world while we're still figuring out exactly what it is, these are the two leading types of cryptocurrencies that we're comfortable in you dealing in.
Yeah, so it has been wild to sort of watch this, and there's been a lot of reports, which is the superior coin, Bitcoin or Ethereum, and Goldman Sachs has come out with their views and others have come out with their views. But I mean, we talked a little bit about why the prices have plummeted, but I don't know if you can speak to the Ethereum plummet that happened that was so significant at all. Have you been following that?
Yeah, I mean, I've been following kind of both the pundits who are offering their thoughts and ideas.
Sure.
I still tend to think of this, filing it much like the fundamental securities markets and economy, traditional economy. And I think that crypto is still missing um, one of the two components that make it something that's going to be widely adopted. So really, if you ask, what is money or some commerce, it has to be something that there is an agreed upon value between between two people to conduct some kind of transaction. And the second is that it has to be relatively reliable in that value. Because if it's worth $1 billion today and a penny tomorrow, then whether or not we should use it to buy a pickle or a space rocket, has no value. And we've seen throughout history um, huge swings in markets, and governments have really come in to put some rules of the road around those markets. It started out so that when people started traveling beyond their villages and they're traveling really far, you needed two things of value. I mean, very earliest ways to transact, the currencies were, paper and shells. And in Newfoundland, it was dried fish. And in Scotland, people who could forge nails, they would go and they would pay with beer and ale in nails, right? But no one really has use for dried fish if you're going really far away. So they came up with these international standards where people around the world could approximate what the value of something is. And this is how we kind of got to the notion of coins that were based on gold and silver and things like that. So, in this Bitcoin world, the problem is when markets start to fluctuate wildly, traditional notions of valuation are going to look to what is the intrinsic value of the thing. And there are lots of reasons why people complain about regulatory and regulations and markets, but it's those types of institutions that would help to stabilize. We've seen for the first time now some trading and exchanges actually hit a pause button like you would in normal trading markets to say this thing is in free fall and we need the markets to give markets time to catch up. But outside of certain parameters, there's really no rules of the road for that. And what I think we're going to need is probably most experts argue that what is going to be required is a ledger where the identity of the individuals is not anonymous. So you know who's holding what, who's holding large amounts of what, when they're trying to sell it. Is it manipulation in the same way that we have currency manipulation and other things? And we're probably years away from that, but a lot of people feel like creating stability in those markets is going to require at least some of those third rails.
Yeah. So you think, how long I mean, this is pure speculation for clarity out there. Do not rely on this as financial advice. But do you think that this is going to rebound anytime soon, following this free fall, or do you think we're going to wait years for rebound?
I think that when you talk to people who are in this marketplace, they've made their career in their stock and trade. I think that they know and understand that this grand design of original anti-marketers to have this whole ecosystem that's completely away from any government involvement, know that that's probably not going to be the best way forward. And lots of institutions, whether they are crypto exchanges or people who are buyers and sellers in these markets, are now going to the regulators to help to rush to market some rules of the road. Self-regulatory organizations, they're early entrants. They have developed all the protections that keep us away from the wild, wild west. Interestingly, I spoke to the largest exchange, the chief risk officer of the largest exchange just a couple of weeks ago. And he said, for all of the people who and institutions who fear large amounts of cryptocurrency just disappearing, or even in hacking incidents, those don't really happen while they are sitting in some place. Most of the risk of ransomware attacks all those things that you read because the headlines are, really, really catchy, of money disappearing happen at the point that some vulnerability takes place. Like, we won't really get into hot storage and cold storage and how crypto is kept, but it's really when that wallet is open, right? And the thing of value is being passed that there's the opportunity to grab it. And so I think that the next iteration of technology and the thing that will help things like Bitcoin and cryptocurrency and the exchanges to survive is to control for those things. I mean, today, there's only 3 insurers in the entire world who will insure that because it's so fraught with that risk.
Sure.
Even though there's never been an instance in which, like I said, as it's being held, those things are going anywhere. So those pressure points, those things that happened that caused the stock market to crash in 29, created the 33 Act and the 34 Act. And we've had lots of dips and recessions and ups and downs, but never any major calamity. Just like the creation of the Banking Act that created Treasury, that helped to create rules of the road in that form. And then money that's passing from country to country, just like the internet has created the world's ability to do now, has created some rules of the road when they created the World Bank to come with rules for countries to pass currency and commodities, and the World Bank. So all those institutions, we're going to need some analog for that because, like the IRS said, whatever it is, and it's not money, we're going to tax it. So I think they're going to have to come up with an ecosystem around that makes institutional investors, institutional market participants, wide adopters of it.
Sure.
And that probably won't happen until there is a standardized way for them to both keep their transactions safe and know how they can count their profits.
Right. So speaking of arenas where there is some opportunity that's ripe for abuse or people doing questionable things, let's talk about what ICOs are or were. We don't see as many of these percolate up as we maybe used to, but for a while there in 2016, 2017, 2018, it was all the rage. So can you talk to us a little bit about that and maybe how the SEC has come down upon it?
I'd say the initial coin offering markets have really kind of run their course, at least in wild use. And that's because, and when I say come down a lot, it's really been, they come down about 74% from the years when they were first really being offered. And that's because some markets have matured. Those who have real rules of the road and ways for people to actually make money investing in those markets, they have matured. And regulators really spend 100% of their activity taking actions against fraudsters, right? Just like any other offering, it's a gold mine that didn't exist, an oil well that didn't exist, buying interest in the Brooklyn Bridge. Those were 10 times the legitimate ones. And I think that the market has kind of matured. If well done with the proper controls, I think that they are around to stay. But that's why there's no proliferation of them anymore because the horse is kind of out of the barn on the Brooklyn Bridge seller.
Right. And so, I mean, those really are governed by, I think most ICOs, they came down and said, the SEC came down and said, hey, you're selling a security here.
Right.
Isn't that how they kind of came down on it? So that's really where the regulation came in, which put the guardrails on, correct?
Yeah. The worst of them were not even securities, they were frauds. But even the ones who were being traded in the markets, I said, you're going to have to treat these like normal securities, which came along with all the protections that the normal market has. So they are around, but you don't see them like they used to because the gold rush is over.
Yeah, well, at least I guess that's positive. I can recall a few clients coming to me back, a few years ago, and there's all these ICOs out of random nation states across the globe for very questionable things. And I can always recall saying, like, I'd do this if I was you. And some listened and some didn't. And then we had litigation thereafter, right? So
Right.
What questions should I have asked you, or do you think people should know the answers to that I haven't asked you here today? if anything?
I just wanted to reiterate that this is a vastly moving market, even for those of us who kind of play in it every day. The regulations are trying to keep up with technology. Machines will always move faster. Um, you know, so a lot of people ask me whether this is a flash in the pan. Is it gone? I think that blockchain is a superior way of creating an audit trail of something and proving of things of value. We couldn't even get into smart contracts and all the ways that that is transforming the industry. Those are really good things, and they are here to stay. I would just say for people who are examining these markets that they would want to think about where the risks are in the market. So the fact that lots of the blockchain and crypto is anonymous also makes it the perfect vehicle for rogues and thieves. That's why we see all the ransomware, being in that market. They want to be paid in that way, and so watch for ways to control and eliminate anonymity, and ways in which the market participants that you may be talking to or working with, how they handle what happens when the wallet opens and the risks are there. That's where the money is grabbed and stolen. You fix for those two things, and I think cryptocurrency, just like other digital transactions, will mature and they'll be around for a long time.
Super interesting. Do you think that there'll be some sort of FDIC equivalency in crypto, or do you think that that will not occur?
I think it's inevitable. When I talked to that exchange and they said, look, 3 years ago we couldn't get a meeting, and now we have a few large institutions that are, at least privately, willing to ensure some of these practices. I think a regulatory agency or some requirement to have something that is going to, support it is probably inevitable. So, at least we know that Nakamoto, who created his product, only minted enough coins to last until 2040.
True.
Right. So who knows who will be around then? But when that reaches its limit, then then we'll figure out whether this scarcity theory of crypto works the same way that it does in the real world.
Buy up those coins. See what happens. No. Well, super interesting. And if that regulatory body ever gets created, I feel like I know someone who might be a good fit for that seat, though I don't want you stolen away from our organization. So no, regulators. With that, I think that concludes today's discussion. If you have any questions that we didn't get to today, please drop those in the chat. We'll follow up with you afterwards. This webinar was recorded, so it'll be available in our library on Thompson Hine's YouTube channel. So please feel free to like, subscribe, and ring the bell for us, because that's always a helpful way of sharing knowledge, and we appreciate that. So I want to thank you all for attending today's program, and most importantly, Marc, thank you for sharing all of your knowledge. It was wonderful.
Thanks for having me. It was a great conversation.
Yeah, it definitely was. And so I'm really grateful that you took some time here today. So folks out there on the internet, when this webinar ends, you'll be prompted to take a quick survey. It's like 3 questions, folks. I'm not asking for a kidney. I'm asking for 3 questions to be answered to help us guide what additional information we can provide you with on our startup Streamlined that are forthcoming. So thanks again. Enjoy the rest of the day. It's the longest day of the year here on the summer equinox, and we will see you next month for the next Startup Streamline. Thanks, everyone.